Welcome to Prepare for College podcast on this Thursday morning. We're here to help families navigate the tricky world of paying for college without drowning in college debt. Now, I'm the host, Chuck Moore, and with me today is Gary Carpenter and Al Hoffman. Today, we're going to answer a question a lot of parents and grandparents may have. And that question is, what happens if you change the beneficiary of a 529 plan to someone outside of your family circle? Are there any tax implications? And if so, who actually pays the taxes and penalties? Well, we're going to break it down into simple English format so you all can avoid any surprises once your tax bill comes in. So, Gary, since you're a CPA, could you explain this situation of the 529 plans that is transferred out of the family realm?
Exactly. I want to address three areas here. Uh, First of all, let me just say, if you say 529 to your accountant, they probably know what it is. That's probably one of the most popular programs out there. And they should understand the changes that you make or can make or can't make. But we want to just give you an outline of here. What are the three main areas where the most questions come up? One of them is where you change the beneficiary. So that's the first one. The second one is where you change the account owner, and that's the person that set up the account, owns the account. Okay. And the third one is making contributions to a 529 plan. Are there any impact on gift tax? And if they are, what are they? So let's go right off with the first one, changing the beneficiary. You got a 529 plan. You got an account owner, and usually it's going to be the parent, but it could be someone else. It could be a grandparent. It even could be a third party outside the family that sets the account up. The beneficiary is the student, the one that's going to school. So what happens if you change the beneficiary? And this happens a lot of times, where you have multiple children in the family. The first child, they didn't use all of the 529 plan. They have money left over there. So they're faced with a decision. Do I take an unqualified distribution and get taxed on the earnings and a 10% penalty? Or do I transfer it to another beneficiary? You change it, let's say you change it to a younger child. You change the beneficiary. You do this through the account manager for the 529 plan. And they can change it to the younger child, the other child. In fact, let's talk a little bit about that. When we talk about family, it includes siblings, uh, children of the siblings, okay, parents, cousins, nieces, nephews, even in-laws are considered part of the family. So if you make a transfer of the beneficiary from your child, let's say, to one of those members of the family, there's going to be no tax impact. But if, for example, you make a transfer from outside the family, let's say you've got, again, a 529 plan and your son, and there is a neighbor next door who has a boy about to go off to school or a girl, and you want to help them out, so you change the beneficiary to that other individual outside the family. Once you do that, it triggers possible tax. What I mean by that is it's going to look at it as there's a distribution from the 529 plan of the student, that's your child, that's not paying for qualified expenses. And it's going into a 529 plan for another individual that's not, the beneficiary is not a member of the family. So what's going to happen is going to trigger a taxable event and where you have to pay the tax on the income that's in the distribution, plus you have to pay a 10% penalty. Now the question comes up, okay, I did this. Who pays the taxes? It's usually the beneficiary, the person who has the money. If the parent received the money and changed it to a beneficiary, changed the beneficiary to another, then that would generate taxes that the parent would be responsible for. But 99% of the time, it's going to be the beneficiary who's going to be paying this additional tax and penalty. So that gives, in a nutshell, a little bit about changing the beneficiary. 90% of the time, it's a non-taxable event. Now, the second one we want to talk about is where you have a change of ownership. And what I mean by that is the individual who sets the account up, you decide that you want to change the account owner. So I set up a 529 plan for my son. And we decide for whatever reason we want to change the account owner to a different individual. You can make that change and it can go from one member from yourself to another individual. It's not going to generate a federal tax, but it may generate in some states a tax on the transaction. So what I mean by that is, one, go to the account manager for the 529 plan. See if they allow to have a transfer of ownership, not beneficiary, ownership to another individual. If it does, and they may not always know this question, but if it does, ask them if there's any implication as far as your state income tax, if you have one. And again, as I said, most of the time, you're not going to have a problem, but it is one that you want to check out with. So again, 90% of the time, you're not going to have a taxable event. Now, the last thing I want to talk about is contributions. And people think that if they make a contribution to a 529 plan, it's governed by the amount of gift tax exclusion you have for the year. Well, that's a starting point. But again, remember, a contribution from a 529 plan can be more than the annual gift tax exclusion. If it is, you need to do some special planning. But for our discussions today, if we say we're going to limit contributions to the annual gift tax exclusion, which for 2025 is $19,000 a year, and that's per individual. So if mom and dad make a contribution, that now goes up to $38,000 a year that they could put into a 529 plan and not generate any gift tax. Now, if a third party makes a contribution to the 529 plan, they're governed by those rules also. Again, $19,000 per individual for a gift tax exclusion, $38,000 if it's, say, a grandfather and a grandmother. They could contribute that to a 529 plan without any gift tax. Now, again, I don't want to get too complicated on this. We're talking gift tax now. We're not talking income tax. We're talking gift tax. So you can make contributions to a 529 plan that are up to the gift tax exclusion and not be required to file a gift tax return. I think it's Form 709. Now for the exception. They have what's called a 5-year election. And what this is, it gives you the ability to front load a contribution on day one for the next 5 years. So what you can do is you can set up a 529 plan. Grandparents do this quite often. Set up a 529 plan. The account owner, let's say it's a grandfather, puts in 5 years worth of contributions limited by the annual gift tax, which right now would allow them to put in $95,000 on day one, and they would have to pay no gift tax. And when you file the Form 706 for gift tax, there is a box on it that says, do you select the 5-year election for contributions to a 529 plan? You check that box, sign the form, that's all you do. Now, in the past, some grandparents who are very affluent, what they would do is they would set up a 529 plan with the account owner as a grandparent and another 529 plan with the account owner as the grandmother. They'd have two 529 plans for the same beneficiary, but on day one, they could transfer $190,000 out of their estate or out of their investments into a 529 plan, and it now becomes sheltered from taxes as long as the money is used for higher education. Now, the other thing about this is in the past, this vehicle has been used by some very wealthy people in order to transfer large sums of money. And we can go into a complicated explanation. You don't need to know about that. But the IRS does look very closely at 529 plans and 5-year elections where there are substantial sums. I'm talking $500,000, $1 million are moved. So I've gone into the weeds a little bit too much there. I apologize for it. But just to recap very quickly, changing the beneficiary within a family, there is no tax implication. Okay. Change of the beneficiary outside the family, it could trigger income tax and the 10% penalty. Change account owners, there's usually not going to be any tax consequences on the federal basis. You do need to check the state to see if there's any impact on state income tax. And finally, gifting to the account. We generally say if you make a gift up to the annual tax exclusion, you're fine. If you need to make more than that, there is a 5-year election. So, Chuck, I think that's about the best I can do in the amount of time we have. So I'm going to pass it back to you.
All right. Thank you, Gary. Al, do you have anything to add?
So there's an old statement out there, proper prior planning prevents poor performance, the 6 Ps of success. Many people have heard that, particularly if you're a person that has joined a band at a high school, you've probably heard that. In any case, or football or basketball, any team sport, actually. But this particular topic is one of those areas. Some proper prior planning, if you do have the resources to set up and take care of a 529 plan for the future beneficiary of the child for education. That is an awesome thing. It seems to me, based on what I've heard today, that there is some additional proper prior planning and the use of those monies when you finally get around to it. So proper prior planning, congratulations to the front end, but proper prior planning, let's make sure that you check it out before you use it. With that, Chuck, I'm going to send it back to you. I couldn't add any more to that, Gary. That was awesome. I learned a lot today.
Well, Al, Gary, thanks for this valuable information. Well, this wraps up today's discussion on 529 plans and what happens when you change the beneficiary outside of the family unit. Thanks for tuning in today. If you found this helpful, don't forget to visit our website at prepareforcollege.com. Now that's college.com. Additionally, please share this information with other parents and even your CPAs, and visit our website for more information on how to pay for college. Until next week, keep planning the smart way and help reduce the cost of a college education. So goodbye, everybody.